topics and opinions expressed in the following show are solely those of the host and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome. And if you are joining us from Ask the Experts that we were just doing right before this show, welcome. I'm glad you're tuning in here to Tax Talk for You. We just got back from a couple weeks vacation and getting refreshed and recharged and ready to go and having fun. And what do? We pick probably the most controversial tax topic you could pick as you're going through this. But I love challenges, and we're talking about politics and taxes. Politics in itself, is complicated. You got conservatives, you got liberals, you got socialists, everybody fighting for what they want and think is best for the United States and their constituents. And I always laugh because I look at the people that are in Congress themselves, and they don't seem to be serving you and I. They seem to be serving themselves. You get people that come in that are not wealthy, don't have a lot of money, and all of them come over, 6 years or 4 years, become some of the wealthiest people. How can that happen on the salary that they're getting paid? And why are they getting paid so much? And then why do they have so much in benefits that you and I can't achieve? Back in the day when the Constitution was established, this was not a paid position. You went and represented your state, your congressional district in Congress, not because of the amount of money that you could make from the government, but because you wanted to represent your state, your congressional district. That's what you wanted to do. So now it's all become a fight to, get people in and make as much money as they can possibly make. If you're getting $174,000 a year, you shouldn't be a multimillionaire after, being in Congress for a short period of time. None of that seems to make sense to me. Maybe it makes sense to somebody else, but it doesn't make sense to me. But we're talking about, politics and taxes. So how do politics and taxes work? Well, it depends on what side of the aisle you're on. When we're sitting down and looking at taxes, the Democratic side, the more liberal side, want to get in as much money from you and I and everybody else to pay for things for everybody else. More of a redistribution of wealth, redistribution of income. That's why you've seen over the years, since they started things like Social Security and then food stamps and, education department and things like that you've seen over the years, taxes that continue to go up and revenues into the government continue to increase, but they continue to spend more money that they don't have because they figured more handouts we get, the longer we can stay in office. So if your congressman was to get you a bridge to nowhere in your town, they could then say, hey, look, this is what I did for you. I got these jobs coming into here. I got this construction project or this project done for us here in my congressional district, and therefore you continue to vote them back into office. I was able to increase taxes to tax the rich, so therefore you continue to vote for me because you're not rich. We promise things to you in order to get your vote so I can maintain my job here in office. And that's the way that seems to continue to work in politics, is what can I do to maintain your vote without caring what burden you're putting on our children and grandchildren and great-grandchildren. The trillions of dollars that we are in debt isn't being faced by you and I, but are being faced by future generations, and are going to continue to be faced by those future generations until we do something like balance the budget. Nobody has the stomach for balancing the budget, meaning doing away with programs that people now, so to say, count on. Giveaways. Yes, you got to help people, but that was what churches and your local governments were for. People helping people, family helping family, not politicians helping politicians. Not politicians giving handouts. So tax strategies and tax policies have been developed around taking money from this class of people and redistributing it to this class of people in the disguise of helping people. In the United States, we've always believed in capitalism, where you can strap on your boots, pick yourself up, find a way, either through education, through jobs, being a small business person, of being able to move yourself from one class to the next. Yeah, maybe it's running your own business. You may not get into the top 1%. Maybe you can be lucky. Maybe you can be smart. Maybe you come up with the next innovation. When computers were starting, there were two guys in a garage creating the computers, and they became, billionaires out there because of what they developed and the strategy they came. Did they have a lot of money to do that? No. Did they have a lot of help getting started? No. But they got started. So it wasn't counting on the government to provide assistance. It was counting on themselves and the knowledge that they learned and developed to make themselves better. And then they hired more people and more things to be able to better help themselves in government and pay more taxes. Now, key areas of policy debate include tax the rich and lowering rates. Democrats usually and generally will advocate for wealth taxes or higher corporate taxes or billionaire tax rates to fund public services. I mean, look at what's happening in New York. Socialist mayor who thinks that they've got to tax the rich. And what do the rich do? They leave. California continuing to find ways to tax the rich more and more. And what have people done? They have moved their companies out of the state of California to other states with lower tax rates. The wealthy are going to find the ways to do it. It does not make it 100% correct to be doing that. The wealthy create jobs, and those jobs create wealth amongst all people. Now, the Republicans are going to focus more on deregulation, reducing the overall tax burden, extending tax cuts to stimulate job growth and economic activity. like they did with the One Big Beautiful Bill. It continued Trump's tax cuts from 2017, and it added in tax cuts for no tax on tips, no tax on overtime pay. So different policies, different tax strategies. And which way, is going to help the masses. By taxing the rich, it takes money out of businesses or makes companies move so that they don't have to pay the tax. See, at the end of the day, what happens if you're going to increase tax rates on corporations is going to set a lot of different things in motion. And those things in motion have that trickle-down effect to you and I. And so, you've got to be aware of what can happen when you set in motion things that are going to increase taxes on companies, on people across the board, whether you're rich, whether you're middle class, whether you're poor, all has an impact in your life. And that's where politics has that impact on not just your life, but everybody's life. And so you've got to take all these things into consideration. Now, hey, I'm getting back into this after 2 weeks and I'm going, oh, when's our next break? Well, our break is coming up. And what we're going to do after this break, we're going to talk about the trickle-down impact of taxing a corporation due to increased taxes in politics. And we're going to do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Talking politics and taxes, probably the most controversial type of show you can have when you start talking about politics, because, you start having the debate, what should government do? What should government be? It's not a conversation that you want to have around holidays with family, much less when you're traveling, having a conversation with somebody that is different sides and don't understand 100% what happens in taxes. We were on a excursion on our cruise, and somebody started talking about keeping money away from Elon Musk and tax money, and shouldn't do this. When they found out that I fight against the IRS to solve tax problems for individuals, they're like, yeah, and you keep money out of Elon Musk's hands. And I said, whoa, wait a minute. Elon Musk has nothing to do with government. He was actually trying to reduce the size of government, reduce waste in the government, because there's lots of waste in our government. But he needs to be taxed more. Well, okay. Elon Musk gets taxed very highly. He's, in the top 1% of people in this country making money. And he pays his fair share of taxes out there. Now, how do you determine fair share? Is you go through the tax code and you take advantage of every single deduction you possibly can, and you get it down to the lowest amount of money allowed by law that you can have to pay into the government. And yes, Elon Musk is the richest man in the world, and he pays a lot of taxes, not just income taxes, but his company pays a lot in sales tax, pays a lot in payroll taxes, and he pays his people really, really well. So how can you begrudge a man that is that smart what he has earned in his lifetime? And he gives away a lot of his money in philanthropy. Okay, that's Elon Musk. So, people are always saying, tax the rich, tax this person, tax that person, tax somebody else besides me. But all of a sudden you start making more money and you're in that tax bracket. You were just advocating for it. Now you're complaining because you advocated for this, but you don't want to pay it. So I've never met an individual who enjoys paying taxes at all. Ask your child, first job they get, first paycheck they get. You just went out there and you worked your tail off at your very first job. Let's say you're just making $10 an hour and you work 20 hours. You're going, wow, I'm going to get a $200 check. And you get your check. And you look at it and go, I only got 180. Where'd the rest of the money go? Went to taxes. What do you mean? They took money. Yeah, they paid Social Security, Medicare tax out of there. Maybe you owed a little bit of income tax or something, and they withheld that. Or maybe you work in a state and you had some state income tax, so it's even more than that. And now all of a sudden you're going, this doesn't make sense. Why am I getting taxed? Because that's the federal system. Now, the same way it works when you're saying, hey, tax corporation. So you're going to go out and tax McDonald's because they're the big business, right? So we want to increase the corporate tax rate at McDonald's. So right now, the corporate tax rate, let's say it's 20%. But you think they should be paying more money in. So you want to increase it to 40%. You want to double the tax on a corporation. Where do you think that money comes from? It's coming out of the pockets of the company. Yeah, it's coming out of the pockets of the company. But the company's got to pay dividends to its investors, its shareholders. And those dividends are expected. They've got to produce a certain amount of income to continue the growth of their stock for those that hold stock in McDonald's. Now, you go, but I don't hold any stock in McDonald's. Wait a minute, you have an IRA, right? And maybe you have a 401k and it's invested into a fund. You probably in that fund hold shares of McDonald's or Exxon or any of the large companies out there that are the S&P 500. You probably own shares of them. So your ownership in that gets impacted if they don't produce the right amount of net income after tax for you as a shareholder. The share prices continue to go down, and therefore your investment in that company has been reduced. And then nobody's happy. The stock market's not happy. You're not happy. Your investments are doing poorly, and you're not making money. Okay. So what does McDonald's do? McDonald's makes that money back up, what they're going to pay in tax. Now, how do they do that? They increase the price of the hamburger or the soda or the fries. So they have to make up the money to make the net income after tax, and therefore increase their price to you and I when we go there to shop, including Walmart and all the other stores. They're going to do the same thing. So who in essence is paying that corporate income tax? You and I. So tax the corporations, tax the corporations, tax the corporations, in essence, taxes you and I. If we shop there. Now, okay, so maybe we can do tax code. I don't shop at McDonald's, so therefore tax them. Okay. Well, are you going to set tax code where McDonald's gets a tax but Exxon doesn't? Or McDonald's gets a tax and Walmart doesn't? No, you're not going to run tax code that way. They're going to tax all corporations the same across the board. That is what is going to happen. They can't discriminate. They wouldn't hold up in court discriminating tax code based on, hey, Exxon. And then you want to see what really happens is the companies that your congressman own would be, the companies would be calling them and saying, hey, don't tax me. And if you vote this way, we're going to pay into your political career this much money and do these things. And then you'll start seeing investors and how you're going to invest. So, how are you going to say that this happens or that happens based on tax code? You can't do that. You can't manipulate it in those ways. So, you're kind of looking at these things and saying, hey, how do we go through and do this or do that? Had a great question that did come in, and one of those questions is, who pays 90% of the taxes in the United States? Did you know that actually the top 25% of earners pay roughly 87% of all federal income taxes in the U.S.? To get to the 90%, you look slightly further into it, and you would have to go into the top 50% of earners, and then you would get to 97%. So 50% of the earners in the United States pay 97% of the federal income tax in the U.S. Isn't that an incredible number? And where do you fall? Now, we're not talking about Social Security and Medicare. We're talking about federal income tax. 97% of it is covered by 50% of the earners in the U.S. That is just absolutely incredible. Top 10% earners are going to shoulder 72% of all federal tax revenue. So we're already taxing the rich. Now, as I said before, what happens if you start at the state level taxing people more? They're just going to move to a lower income tax state, or a state with no income tax, such as Texas, Florida, Tennessee, just to name a few that are out there. You could even go to Alaska out there. So, you're kind of looking at those things to see what makes up the problem and where people go. Hey, we're going to take another short break. When we come back, we're going to talk about Elon Musk and what he does to avoid taxes. And we're going to do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
All right, Elon Musk. How does he avoid paying taxes? Some of the strategies that he uses to avoid paying taxes is some of the strategies we use with our clients to avoid paying taxes. How about that? Elon Musk does the same thing that we do to work with some of our clients to avoid paying taxes just as well. Now, his are a little bit more trickier because he owns public companies. Elon Musk will avoid paying traditional income tax by taking a minimal salary, which is what we do with our clients as well. He holds his wealth in unrealized stock gains. So let's take, his investments and ownership in Tesla or SpaceX. His stock, as the stock continues to go up, he has unrealized gains. And those gains are significant. And then he funds his lifestyle through tax-free asset-backed loans. So he'll go out, borrow money against the stock that he owns and use that to support his lifestyle. So he can do that because there's no tax on stock gains that are not realized. Okay, so what does that mean? So that means you hold stock in, let's say, Tesla, and you bought it at, let's say, $10 or $20, and now it's $300. So you have a huge stock gain out there. Depending on how much stock you own, would depend on your worth. So that kind of huge increase in the value of the stock has value. He takes that value and pledges that as collateral against loans to maintain his lifestyle. And then he also sets up his compensation to where his compensation is achieved through stock awards and options rather than through a standard salary. So we've seen him take other companies and say, hey, look, I'm going to work, and if it reaches this level, I get so much in stock awards or options. And he becomes richer because of that unrealized gain and options he's received or stock awards he has received. Really nice way of doing it because everybody benefits when he is successful. Everybody that is a shareholder, that is. So if you didn't own shares in Tesla and it went from $10 to $300, you didn't benefit, other than the stock markets probably continue to increase. But you didn't benefit from that one stock unless it's held in one of your investment accounts. But if you were a shareholder at $10, you would have the same benefit. And therefore, what Elon Musk did, he benefited you as well as any other shareholder that's out there. That does not get taxed until he cashes that out. So he continues to hold those shares at that value. So he's got that ability to be able to do that. He also borrows money against his securities. So then he uses that money to pay for his lifestyle, his business ventures, and he doesn't have taxable income because it is considered to be a loan. So he will use his billions of dollars in stock as collateral to take out the bank loans. You could do those kind of things as well, depending on how much the value of your stock is. So you could have those tax-free money to continue to turn around and invest. What Elon Musk is doing is continue to develop generational wealth that he will eventually pass on to his kids. He'll do a lot through philanthropy and giving money away. So there's a lot of things that Elon Musk does as investments out there. Now, some of the other things that Elon Musk can do that would help him is investing in, let's say, real estate. If you were owning real estate, you would get the write-off of depreciation on the assets, not land, but the building and equipment, stuff like that he borrows. His companies as well would get the write-off for investments in new equipment, upgrades, and things like that. So, they're using all the techniques possible to keep investments in the business. So that's kind of the difference. So when you're now saying, hey, tax the rich, tax corporations and things like that, if you add taxes to, let's say, Tesla, again, they're trying to get a certain net income. So therefore the prices of those vehicles would continue to increase to go from there. Now, see a great question from Jeff that came in. How much tax would I pay on $1 million? Well, first off, it depends on how you earn the $1 million. So let's get that straight. If it's capital gains, you have capital gains tax rates. You have other things that come across there based on income. If it's from, let's say, properties and other things, you might have depreciation that lowers it. But if it's from your job and you're a single taxpayer, a single filer, and you made $1 million, you're going to pay close to $325,000 in income tax. A lot of money. Yeah, you made a lot of money. Do it. What can we do to reduce that? Well, then you have to sit down and look at the different things that you could possibly do. If it's income on your business, are you getting all the write-offs that you should have? Are you taking all the deductions that you have? Is your business structured the right way? Which way it would be better for your business to be structured? All those things we've got to take into account to determine, where you go from there. But kind of to break this down and give you an idea, the tax is going to be the same on the first $12,400. It's going to be 10%. You're going to pay $1,240, just like every other American would pay. If you're in the 12% bracket, now this is after the standard deductions and stuff like that, so this is just taxable income. Then you move into the 12% bracket, which is the $12,401 through the $50,400. That $38,000 is taxed, and you pay another $4,560. And then you move to the 22% tax bracket, which takes you from $50,401 through $105,000. That's $55,300 of additional tax money, and at 22%, that's $12,166. So you can see we continue to move through these tax brackets as you go throughout there. The 24% rate, then you pay the $23,000 on top of the other couple taxes that you've already paid. Then you move into the 32%, which starts at $201,000 through $256,000. So that gets you another $17,000 of tax. And then you move into the 35% tax bracket. And we're not done yet. That only goes from $256,000 to $640,000. So that's $384,000 that's taxed at 35%. So add another $134,000. Then you move into 37% tax bracket, and you're $640,000 and above. You pay another $132,978 to get you to that $325,957 in tax. Whew, that's a lot of tax. You need to find the deductions to get that down, and we haven't even talked about investment income tax that could be added to that as well. Hey, we're going to continue talking about taxes and how politics affect the taxes that you and I pay, and we're going to do that right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to TruckerTaxTools.com, a solution built specifically for truckers. TruckerTaxTools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Politics always affect everything that we do. Government regulation is overregulated. When you need a license for things that just seem like you shouldn't need a license for, it's just government getting money from you. You should be able to go fish. You should be able to, you shouldn't need a license to go fish, but they should be able to cap the number of fish, whatever you take. Fine. But you need a license for certain things. It just seems ridiculous how much and how many things are licensed. Our system of taxing has been basically defined as a progressive tax system. And that is a tax structure where tax rate increases as the taxpayer's taxable income or wealth rises. It is built on a concept of ability to pay, which argues that people with higher income can afford to contribute a larger percentage of their earnings to public services than those with lower incomes. So you split a system into tax brackets, like we were just talking about, the brackets that we have on our system now, starting at that 10% and going all the way up to the 37%. So it's a complicated system, but it's the structure we get to deal with, as opposed to something that it be considered a flat tax, like Social Security is a flat tax, and it's flat up to a certain income cap. So once you earn over that capped amount, you stop paying into Social Security, meaning low middle class workers pay a higher percentage of their total wages into Social Security than the ultra wealthy do. But that is what we're putting into Social Security and Medicare. So we look at that to determine what your Social Security is going to be out there. Your sales and excise tax are considered to be regressive. They're on everyday goods and services. They're aggressive because lower income individuals must spend as much, a larger percentage of their total income on basic necessities than wealthy individuals do. However, a lot of basic necessities aren't taxed. So their food and stuff is not taxed. Clothing is, and other things are, but it's a state and local government issue, not a federal government issue. There is no federal government sales tax. They do have an excise tax on goods brought into this country, and there is a fuel tax that is supposed to go toward, quote unquote, helping our roads and bridges. Wait a minute. They're actually supposed to spend that money on the roads and bridges? Last road I just drove on had potholes and hadn't been fixed in years. Where's that money going? Good question. Maybe we have to have that one for another day. And so, we kind of got to look at how the tax situation goes. And when we're talking about federal income tax, it's always a progressive system that's out there. Now, that system isn't progressive on a corporate level. They're on a flat rate for corporations. And that flat rate that they pay, as I said, gets passed on to you and I. Life gets complicated. Politics get complicated. The way you or I vote makes life complicated. It's easier to pass something on to somebody else, make somebody else pay for it. But our government should be a very limited federal government. That is what the Constitution spells out. That is what we learned in school, was that our federal government had checks and balances and limitations on what it can and should do. Our politicians decided many, many years ago, when they started Social Security as a safety net coming out of the Great Depression, that you and I needed something to guarantee that we could live with retirement money when we go to retire, and the IRS, the government, would collect that money and set it aside for our retirement. What did the government do? Borrow that money from itself at a low interest rate, didn't invest the money, didn't make money on the money, and therefore government owes Social Security money, but it's one and the same, so therefore they don't really owe it, and therefore the government really doesn't have the money sitting aside for you or I that they were supposed to be sitting aside, like a 401k. Government has gotten their hands in things that were never set up. Federal government was supposed to keep their hands out of the states. The states were supposed to maintain the states, not the federal government overseeing the states. What was specifically laid out in the Constitution was only what the federal government was supposed to have their hands in. They weren't supposed to have their hands in education and roads and bridges and things like that. They were supposed to regulate interstate commerce and defense of this country. Now, if we could ever get away from our government doing the things that they are doing, maybe we could get back to a balanced budget and not have to have high federal income tax rates, but be taxed here at the state level. And if the state runs it smartly, like some states have, and have a balanced budget and budget surpluses, that we could get this country back in order. That's why we have problems here in the United States. They have decided that the federal government has to have overreach and oversight over everything. But that is not what's laid out in the Constitution. That is not laid out for what this government should be doing. They should be protecting our borders. They should be protecting our country as a whole. They should be helping to regulate commerce between states, so that there isn't an argument between the states of who regulates this or who regulates that. So when you're dealing with goods and services sold between the states on interstate, that is what our government was set up to do. If you go back and read the Constitution, it was very specific. What is not in this document is left to the states to regulate, not the federal government. Federal government should get their paws out of each and individual state. We don't need to collect a lot of taxes from California or New York and give to Washington or Oregon or Florida or Georgia or any of the other states. That isn't what the government should be doing. It's not redistribution of wealth between states, much less redistribution of wealth between individuals. My soapbox for today is, we got to get back to reading the Constitution, understanding the Constitution, and enforcing what is only in the Constitution. And that should be what the Supreme Court's doing, not getting into these other squabbles that they get into. But they got to get back to checks and balances and going back to enforcing what's in the Constitution. Whew. What a day! What a way to come back. You get to go and seeing I guess they want to say the largest state in the union. They are larger than Texas. I guess Texas is number 2, but everything's bigger in Texas. Remember that. But I will tell you this: we were in Icy Straits and doing an excursion up there, and we probably had some of the biggest and best Alaskan king crab. So if you get up there, there's a nice little restaurant in Icy Straits. It's the only one that's there in that port area. And man, it had reasonable prices compared to everybody else, and had huge Alaskan king crab legs. I always thought the crab was one leg, and just one. When they bring out one leg, it is the leg and the claw. So basically, it was delicious. And then as I was walking over to go get that for my wife and I saw somebody had snow crab, and it's probably the biggest snow crab I've seen either. So if they say everything's bigger in Texas, they're not importing the biggest king crab legs here to Texas, nor are they importing the biggest Alaskan snow crab legs either. So I will give Alaska credit for that and props for that, because man, that was great and that was delicious. It's kind of on our bucket list to get out there and see Alaska and visit Alaska and be able to see things out there. Met some really nice people that are in Alaska. I really wish I would have been able to go fishing up there or something, because man, some of that water looked great to go fishing. We were in Skagway and took the railroad up to the top of the hill, and there were some beautiful waters up there. I asked the young lady who was narrating and talking about all the areas up there, I said, can we just stop and go fishing? And she goes, well, you got your passport, because we actually crossed into Canada and stuff at that point. And I was like, no, but nobody's around. Can't we go anyway? And she goes, no, we can't stop, can't do this. Plus she didn't bring a fishing pole or anything else. So I figured we could figure something out. But if you ever get a chance to get up there to Alaska, it's a great state. And as I was talking on Ask the Experts right before the show with Steve-O, we were talking about daylight, and it is true. We were up in Fairbanks, and sunset around 12:30, but it never really got dark. It was still looking like dawn. I mean, it wasn't really bright, but it wasn't dark. And then morning came at 4:30, so only about 4 hours of semi-darkness up in Fairbanks. So you got to be prepared for that and the adjustment to that, because we stayed up very late. And then if I'm kind of one of those guys that if the sun comes up, I'm awake. So I was awake at 4 a.m. after going to bed after midnight. So it was a very, very long last day out there. And then getting adjusted coming back here to Texas was quite a adjustment in hours and what actually is nighttime here. So hey, before we run out of time, TaxationSolutions.net is your company to go to for solving your IRS problems. Their phone number and our phone number is 888-930-1016. Again, 888-930-1016. Hey, and as always, we're right here at 10 a.m. Eastern Time on W4CY Radio. It's Tax Talk, the number 4, the letter U.com. You can follow us over there. Never miss a single episode of Tax Talk for you by following us there. And if you do, you can go to iHeart, Spotify, Spreaker, all those out there, so that you can catch up on the podcasts out there. Like, share, get everybody coming in and listening to us. It's not always I'm on my soapbox, but I had a great time being on my soapbox about politics here today. Remember, we should be fighting for what's in the Constitution, not fighting for giveaways to everybody and anybody. That's where I stand. Again, have a God-blessed and glorious week. enjoy it. We'll see you right back here next Monday, 10 a.m. Eastern Time on W4CY Radio and Tax Talk, the number 4 letter U.com. We'll see you next week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at TaxTalkForYou.com. See you next week at W4CY.com.